Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Welcome to the ISE FX Options Weekly Outlook for February 23rd, 2009. I'm your host, Jason Ayres, founder and president of OptionSource.net. As always, we're going to take a look at our weekly U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. And as you can see here, the U.S. dollar index finally broke out to test our 88.89 focal zone. And on this weekly chart, obviously, we can see we closed on the lower side. Now, as long as the index holds within the 84.85 focal zone, the window is open for a continuation into our 90.92 box. On our daily snapshot here, the index has simply completed a measured test back into a previous resistance level. Now, support here will lend even further credibility to a continuation of a U.S. dollar strengthening. With that in mind, let's take a look at the first of our ISE FX options pair values, the CDD, the U.S. versus the Canadian dollar. Last week we identified a sideways triangle and suggested that a continuation to the upside might be expected. Now, we did see a mild breakout to the upside. However, the pair value closed on the low side Friday. With the CDD consolidating above 124, the 128 to 130 focal zone appears to be a logical target. We have identified a resistance level within that 126-127 range, which may suggest a deeper test of that 122 to 124 box. However, this focal zone still remains a key support level, and as long as it holds, we will anticipate a test of 128 to 130. Well, we finally saw the YUK, the US versus the Japanese yen, test that 93.94 resistance that has been on our radar for a couple of weeks. Now, a natural pullback at this point is likely to yield a test back down into that 91 to 91.5 range. If we see a break above 94, there is an immediate resistance within the 95-96 box that will need to be overcome before any further strengthening can be expected. Well, since the dollar index is most heavily weighted in the U.S.-Euro relationship, it's not surprising to have seen a similar upside break in the EUI, the U.S. versus the euro. That being said, we are now seeing the completion of a retest back into the 77-78 focal zone that needs to hold as support. Another push higher from here will still meet with resistance within that 80 to 81 range. Further backfilling is likely to test the 75-76 box. Well, next up, the BPX, the US versus the British pound, and all of our focal zones from last week still apply. We find the pair value retracing back down into that 68-69 range, where support here will once again open the window for a further US dollar strengthening against the pound. The 70 to 71 area still remains an upside resistance. However, if this is overcome, we will look for a push back into that 72 to 73 box. With 70.71 being a natural retracement of the preceding pullback from 74 all the way down to 66.5, we are open to the possibility of a test back down to that 65-66 focal zone. Well, the AUX, the US versus the Australian dollar, appears to have formed a continuation diamond, suggesting the possibility of a push higher. At this point, we are seeing a test for support at the higher range of our 152 to 154 focal zone. A bounce here opens the window for a move towards the 160 to 162 range. Failure to hold this level and the pair value is likely to migrate south back down towards that 146 to 148 box. Let's wrap things up with a look at a few of our key points. First of all, the US dollar index tested the 88.89 focal zone and subsequently pulled back to complete a measured move to the downside. Support at 86.87 opens the window for another leg higher. The CDD appears to be consolidating above the 124 level after a move to the upside. Support here adds further credibility to a test of 130. The YUK has gained some upside momentum but rejected off of a resistance level. We may see a deeper retracement after such an ambitious move. The EUI is moving in a similar manner to the dollar index, as we saw a push higher and now a measured retracement. We need to see support at the 77-78 level to be confident of any near-term attempt at a new leg higher. The BPX continues to consolidate within a natural retracement zone, and with Friday's close, the technicals appear to support a further decline. And finally, the AUX appears to have formed a bullish continuation diamond, suggesting the possibility of a push higher. A break and close above 158 will lend further credibility to the possibility of an upside move. And this has been your ISE FX Options Weekly Outlook for February 23rd, 2009. I'm your host, Jason Ayres, founder and president of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.